Welcome to the Rigatoni Capital podcast. I'm your host, Colin. I am here with three special guests tonight, and we're going to bring them in to talk about the energy space, and we're going to try to tie everything back to investing. And of course, I'll give you guys an intro. And first, I'll start with Phil Pinelli of the Stock Talk newsletter on Substack. Phil, how you doing?
I'm good.
Phil, you're
I'm
there?
awesome. Awesome.
Phil brings decades of experience across tech, banking, and entrepreneurship. He has owned his own business. He has seen multiple market cycles from the inside, and that experience gives him a perspective on markets and investing that you do not find anywhere else on Substack. Next, we have Eamon O'Malley of the Capacity PLC newsletter on Substack. Eamon is my go-to voice on oil, natural gas, and the energy complex broadly. He works as an energy pricing analyst to create custom prices, proposals, and what else do you do? Monitor day-to-day oil pricing?
Yeah, pretty just monitoring pricing and for electricity and natural gas commodities. So
Yeah,
definitely see a lot of that now. But
yeah.
yeah,
Thanks
no,
for coming
thanks
on,
thanks so
Eamon.
much.
I appreciate it. And then finally, we have a brand new guest, the Rigatoni Capital podcast, Clinton Smith of Clint's newsletter on Substack. Clinton is coming in with a background in the energy space, and I look forward to talking to him. Clinton also helps investors and operators avoid costly energy mistakes before capital is committed. Backed by 25 plus years developing CHP, microgrid, and distributed energy projects. Clinton, what's up, man?
Hey, happy to be here. Thanks for having me. It's a
Thanks for
pleasure.
coming on. I really appreciate it. And then I also want to note that these three gentlemen have their own podcast, which is called Power is Power Podcast. I believe that's the new name of the podcast. Is that correct?
It is correct.
All right. So I hope you guys please subscribe to everybody. And by the way, Clinton Smith, your newsletter I have is just called Clint's newsletter, but you do something called Dawn's Run. Is that correct?
Yeah, thank you. That's correct. So I do a AI-driven market intelligence report called Dawn Run,
Yeah.
and I've been doing that for about 2 years, dialing in my AI agents that I created and trying to perfect it. So
Yeah, very cool. Um, okay, so hey, a lot of crazy stuff happening. The last time I had Eamon and Phil on, it was like after Maduro was captured in Venezuela, and everything was oil this, oil that, and how many barrels of oil were in the ground in Venezuela, and what the heck was U.S. thinking, and what does this mean for your stock portfolio? And Eamon breaks down kind of like the geopolitics of it as well, in my opinion. We had, I believe, Iran strikes the Qatar state-owned Qatar Energy. It looks like this is called Ras Laffan. Are you guys familiar with this?
I'm not, but yes, definitely
That
aware that
that's
they struck Qatar.
that's the
Yeah,
LNG, right? That's the LNG
That
in
was the
Qatar.
LNG, yeah.
Yeah,
yeah.
That was their
I'm
biggest
familiar with it.
export. Yeah, one of the biggest export facilities in the Middle East and maybe even globally.
Actually, that is
Um,
globally. Qatar is
yeah,
known for being as big as us when it comes to LNG.
yeah.
Yeah,
And I think this
yeah,
happened within the last 24 to 12 hours. So that's
Correct.
brand new.
yeah.
I see Brent crude must be spiking because of news like this. And, US natural gas has been exploding higher, I believe. And, we have like Goldman Sachs, they'll come out with some of their analysts, will come out with their commodity team. And, they're saying Brent is likely to exceed its 2008 all-time high if the market starts pricing in longer disruption. And, so things are pretty crazy, probably a little more crazy than I think the market's trading on personally. Eamon, can you walk us through just like a background of what you're seeing in the oil and gas commodity space and just like the basics of what's going on in your world?
Yeah, absolutely. Yeah, you pretty much hit it. It's a lot of just the geopolitical risks right now from the Iranian strikes. And it seems to be changing so much every day. Kind of, yeah, we briefly touched on it a couple like discussions ago, but like everything is centered around that Strait of Hormuz, which is kind of like that the pointy like peninsula right next to Iran and Qatar, which coincidentally carries like 20% of the world's oil supply, and I believe has around like 200 tankers currently anchored there. So has caused significant supply disruptions for not only crude oil but also LNG, as you said. Um, yeah, so WTI and Brent crude, I think, reached a point of like $120 per barrel just a couple weeks ago, which basically was double just a couple months ago when we had this huge OPEC supply glut. Um, like a ton of overproduction when oil was just kind of trading at like 55 barrels or dollars per barrel, which is almost considered like the break-even point. So in just such a short amount of time, it's completely flipped. But yeah, like as you said, it's not because of like trading fundamentals or anything like that. It's just because there's so much stoppage right now in that strait, and um a lot of reports with like Trump saying, "Oh, like we're gonna facilitate sh tankers going through the strait." And even today, I think like they're sending ships through the Panama Canal to Asia, so they're finding ways around it. But for the most part, there's so much stoppage right now, which is just causing prices to spike so much. Right
Yeah.
now they're trading at around like $95 per barrel, so. Um, and
WTI is trading around 96 as we speak.
Yep.
got it, yeah. And like that gap, I think there's normally like a $5 gap between WPI and Brent, just because Brent's like the standard globally, but it's really like closed a bit just because yeah, like the US is also so severely affected by that. Um, so yeah, it's definitely a lot to monitor. And as you said, Qatar just got hit a ton, I think today. Um,
And one
maybe up to like
one thought about that, Eamon,
yeah.
it's 17% of their capacity will be taken out for the next 3 to 5 years as they rebuild that section that has been destroyed.
I just saw that. I think the same article. Yeah, like all their LNG and like the Qatar energy CEOs like panicking pretty much. So it's definitely tough. Yeah. We'll see
Okay,
what
so you're saying that the spread between Brent crude and WTI has actually come in a little bit. It's
I,
shrinking a little bit, huh?
I think so. Just because of the risk right now. Like yeah, normally like Brent crude, just because it's like the global standard, it has that a little bit of a larger premium, just because it's more trustable. And WTI is a little bit cheaper. But at least from what I've seen, it's pretty similar right now, and I have no idea if that's gonna stay or not, because it's
Yeah.
fluctuated so. But yeah, it's definitely interesting. So
So let's just use like gas prices at the pump. Gas prices at the pump, and let's say Asia and the Middle East and Europe, are they seeing a larger spike in gas prices versus the US right now?
yes, absolutely. That's a great question. Pretty much, I thought this was really interesting. Yeah, like a lot of European markets, like so not like Brent, but like I think today, like the Dubai crude oil has risen like to its highest level like ever. And it's like very specific countries, markets that are being affected by it, not as much. Like the US is actually for LNG, we're actually fairly consistent because um like our export levels are already at its maximum capacity. So we're not as significantly affected by like demand shocks or supply shocks, should say, because if like there's higher demand in other areas, we can't supply anymore. We're literally at maximum capacity. So I think like the forward curves right now are pretty much they're like in the 35 cent per therm area, which is like very kind of consistent. For gasoline, yeah, it's any of the petroleum products, they're going to be affected by that as well. But we also produce a lot of the like light sweet crude oil. So as like a net exporter, we're a little bit protected there, but we get all of our heavy sour crude from exports. So that's the tougher part. But yeah, it's gasoline prices I think are honestly pretty moderate right now. They're not too crazy. So
Yeah. Yeah. You interviewed Mariana Paraga from Reuters, who's an energy correspondent. Uh, and she covers, I guess, mostly like the Latin Americas and the Venezuela situation. What did you learn most from this interview that you can tell our listeners?
yeah, that was really insightful. She is a Venezuelan Reuters beat writer, basically covering the energy industry for the last 20 years. And a lot of it was so political, I think. Like the regime is so, and I'm totally blanking a little bit now because it was a couple months ago, but
It was a long
um
time ago, so I bet you a lot of stuff has changed, you know?
yeah, it was so insightful. I'd have to reread the transcript myself, but um
Well, it was
I
a
know
great
like
interview either way. I mean, I
thank you,
recommend,
yeah.
I have it on the video if people are seeing it.
Yeah.
I recommend it.
Yeah, I guess one of the main points is like a lot of the PDVSA, which is their main utility basically or oil company, is very kind of impacted by like they'll get other, I guess the military presence from like Cuba. Like they'll bring in a lot of soldiers from Cuba, um, like kind of threatening them to kind of take more protection in controlling that area. So um but yeah, PDVSA has been hit so hard by the um, investment infrastructure that's going in place now. Honestly, I haven't heard too much about it with all the Iran stuff going on lately. So I don't know how developed it's going to be moving
Yeah.
forward. It's definitely, hopefully, maybe some more investments should be coming in from private
Chevron
U.S.
and Exxon.
Yeah, or any of the highest bidders. I guess we'll see. We'll see how that goes.
All right,
But yeah.
cool. All right. So, Clinton, can you tell us a little bit of the background of what you do again? I know I did the intro, but I kind of want to hear it from you real quick, and we'll come back to you, Eamon, for sure.
Yeah, of course. Eamon, thank you for that. I'll just add today I was driving to a site walk in the Inland Empire, and I was shocked to see the gas prices. Here in California, I kind of use that as a bellwether.
Yeah.
And prices were at $6, which
Wow.
was huge. I haven't really seen it that high in a while. In
Yeah.
fact, I didn't remember it being over $6. My wife said, "Yeah, it was over $6 before." But anyway,
Mm.
Yeah.
we're definitely feeling the heat. And what I do is basically, so for about 25 years, I've been involved with various corporations, Allied Signal, Honeywell, Ingersoll Rand, these different companies, bringing new power generation technology to market. Over the last couple of years, I started getting involved with the engineering, design, procurement, and construction piece. This is the part where you take a piece of land and you put the fuel and the electricity and you get it all together. And then you align all the proper pieces of infrastructure to then generate power, create clean emissions profiles, and make it profitable for 20 years. And so that's about the lifetime of most of these projects. They build everything out for about 20 years. So that's pretty much what I do. I do that for data centers, wastewater treatment plants, Fortune 500s like Pfizer, utilities like PG&E, SoCal Edison, Dominion Energy. These are some of the names of clients that I've worked with over the years. So yeah, that's pretty much it. And I work for a company called OHR Energy. We're located in El Segundo, California. We're in one of the most dense energy corridors, I think, in the world, honestly, because it's the LAX corridor. I have 3 major data centers within less than a 5 mile radius.
Wow.
Two Equinix and 1 Digital Realty data center right here. So if you're ever at LAX, better give me a call because I'll come pick you up. We'll go do lunch and have a good time.
Yeah, for sure. And so the company's territory is like the whole country. It's not just California.
Correct. So OHR Energy is a California licensed EPC, but the way that we do work, we don't self-perform work. So we're more of the executive level that brings in the construction teams and others, and they do the work. We hire them to do the work. Right now, we're licensed in California, but I'm actually talking to some groups right now about expanding outside California into the data center corridors of Virginia and other locations. So we are looking to expand currently. Yeah.
Okay. And so are you a partner of this firm, or what's your title?
Yeah, right now I'm the VP of project development and EPC
Yeah.
management, but yeah, I'm not a partner right now.
Yeah. That's cool because I guess Virginia is a hotbed right now for these data centers. Who would have thought? Right around DC, that must be popular. And then also I'm in Pennsylvania, so when you go out a little bit west from Philly, it's a big data center area too.
Oh yeah, yeah. And all the
Yeah.
generations come, yeah, so much coming from there too. So
Yeah. Clinton, what are you seeing in the data center build out in terms of, I guess, like the newer chips that are being deployed from, let's say, anywhere from like NVIDIA new chips and, like next gen AI infrastructure, like in terms of that point of it, like I think you had mentioned on a podcast, like you guys don't know what's coming, because it's going to be crazy. These chips can do a lot more than what we are used to using, what we think they can do today. Like it's kind of like exponential how crazy this AI technology with the newer chips and what more they can do. Can you explain that to us at all?
A little bit. Yeah. So I'm not a chip expert, but
That's
I'll
okay.
let.
Yeah, but you have an insight that we don't have. I sit behind a desk. I'm in food commodities, so I don't. You know more than me, I'm sure.
I'll share some insights and our teammates here can elaborate further too. But Phil and Eamon got DG Matrix on one of the recent podcasts, and they are a company that's building out accelerated infrastructure to do just that. The problem is that these data centers, like everybody I'm sure who's listening, has used AI probably every day. The tasks that we're using AI for, even power users who use it all day long, aren't really to the level that they're going to get to. So think agentic AI that goes out and does all these processes, takes full campaigns all the way through and all these kinds of things and heavy duty calculations. Well, just to train those data centers requires massive, massive energy. And the energy, because of the way that the energy flows, it's got to be very dense. And so, like I explained it before on one of the other podcasts we did together, guys, if you had those cables sitting here and you could visually watch them inside the conduit, as that energy is turning off and on, you would see these cables buckling. It's not cables, it's bus bars. But just to give kind of the sort of retail feeling of what's going on here, it's just so massive. The current existing grid is very old. It's a piecemeal patchwork that's been put together over 100 years. It varies from state to state. It has different variances across each utility. And so what's happening is these data centers, as they're starting to roll this out, are going to need way more energy infrastructure than exists today. DG Matrix let us in on some insight recently that the NVIDIA chips and DG Matrix is looking to do a slightly different infrastructure. So to go from alternating current to DC current, it's stiffer. that requires some upgrades and changes. But that's one of the things that's coming out. So is
So
the AC to DC.
yeah, so like let's say Rigatoni Capital goes wants to build a new data center. And we want to figure out a way that we can what's the best costly way to do this in terms of like we have to worry about regulations in the state and then in the county in which we have no idea what we're doing. We are interested maybe in saving money. And is that going to be behind the meter or is that going to be part of the public grid, right? Is that where you come in and you kind of give me like a custom plan and like based on your location and what kind of gigawatts you need and what you want to do? This is how we think your best program would be in terms of energy. Is that what you do? You're like a
Exactly.
consultant?
Yeah, I stay away from the word consultant, but it essentially it is a little bit. I mean, yeah. So if Rigatoni Capital called us today and said, "Hey, we want to build a data center," the first thing we do is we look at the utility that you operate within, PMJ or whoever it might be. I'm not really sure in
At
Pennsylvania.
Pico, I don't know who owns Pico. I forget the stock
Pico.
ticker.
Okay, Pico. All right, cool.
Yeah.
Yes. So we would basically take a look at their interconnection rules. So every grid operator and utility has their own set of complex rules on what's allowed when you connect to their grid. And you hear a lot of folks talking about behind the meter. Sometimes they're talking about specific microgrids that are not connected to the grid, but that's extremely rare. And the reason why that is if something happens to the microgrid and the data center goes down, even a small data center could cost $1 million a day for being down. So it's like an emergency. It's a 911 emergency if one of these data centers trip. And so that's why they have the N++. And I'm not a data center expert either, but they have all these redundancies. So typically what happens is they do like in California, it would be called an inadvertent minimum export agreement. And what that means is that the utility is going to have energy available up to your power meter, and the power meter is the separation. It's the billing meter that, we all know. We see our bill. It's a meter.
Yeah.
And so basically that's it. We basically would say, hey, let's take a look at this. Then we'd navigate the entire terrain, and it's going to be interconnect agreements, emissions, and air permits and things like that. And then they go into the actual local jurisdiction and designing the drawings,
Okay.
taking that through each phase, 30, 60, 90% in a way that's risk-free or minimal risk. And then if Rigatoni Capital wanted to move forward after doing the 30, 60, 90% drawing package, we'd then credit that towards the full development of the project. And then what we would do is we would evaluate the goals and the entire environment and come back and say, okay, given your location and all the other factors, you would be perfect for 20 megawatts of bloom boxes with an absorption chiller located here, with train controls that do XYZ, and we're ready to design it and deploy it for you if you say go. And that's pretty much it. And then basically we'll take it all the way through, and we will actually go out and construct it, and then we commission it, and then we make sure it meets all these goals, and then we sign it off. And then we're actually looking at doing long-term agreements as well for the full 20 years. We don't do that right now, but I have partners that do that.
So I think this is a good time to bring Phil in because, and I'll ask you, Clinton, first is, you would think that your company is like thriving right now and like you're busy and like this is like the time for you and you're expanding this data center business and these opportunities must be like thriving for you. But is there this bottleneck concern that there's just not enough energy in the country? And I want to hear Phil's opinion on that too, because the last time we talked, he's like, I don't know where we're going to get this energy to fuel this type of these big hyperscale data centers. Isn't that like a concern? Like where the hell you're going to get the energy from?
Major concern, and you guys are just nailing it because the truth is, again, there's delays. So there's like a 5-year delay, not only on the bits and pieces that go into this, but meaning the electrical infrastructure, there's multi-year delays, but the interconnect agreements are 5 years out. And so what we do is we're really niche focused. So we're about 20 megawatts and below currently, which is it's a little bit too small for a lot of the big players.
Mm-hmm.
And so that's where our niche is. But you're right, it's a challenging environment. And despite you would think, man, you must not be able to the phones and the doors. We are very busy, but it you would expect it to be just an avalanche, and it's not quite like that.
So like mid-tier, we're talking like the Digital Realty and Equinox. That's more of the type of company I'm thinking of here.
Yeah, exactly. And the hyperscalers, not so much, one of the bigger reaches for us right now is I'm working with a group, Sustainable Development Group, and they're doing data hyperscaler stuff. That's one of the folks. Another person, they had like an 800 megawatt facility, which again, that's much, huge compared to 20 megawatts. And I told them, I said, hey, that's way out of our range. And they want to do it out of state. And they said, yeah, but isn't it all designed? And aren't you doing all the same stuff? And don't you do that already? You hire a professional engineer to stamp it all and verify it. And I go, yeah. So that's what we're looking to do for an early expansion, is to actually do the design package and stuff first. But yeah, you're right.
Yeah. Yeah, that's Mark Zuckerberg, right? He's the one that called you up.
Yeah, Mark and these other guys. Yeah.
Phil, what are your thoughts in trying to get energy for these data centers? Has anything changed since we last spoke? Is there any breakthroughs? Like we were like hoping for miracles here.
Yeah, there hasn't been that critical breakthrough, but there has been measurable improvement towards that. One of the things that happened was the federal administration finally said the hyperscalers have to come up with their own power. They cannot touch. And what I haven't seen yet, and it could be out there, but I've missed it, is that they haven't laid down the exact size at which you have to go find your power. In other words, Clinton's talking about 10 mega. Well, you probably don't have to get your own power for that, right? But it's going to come. And so that is really the biggest change since you and I last talked, Colin, is that the government has gotten fully behind the voice of the people. And they've said, it's okay if you're in their backyard, you just can't impact their bill any longer, their electric bill, their gas bill, their energy bill. So that's the biggest change. Now, we did have a few things we talked about in the last couple of podcasts for Powers Power that were generally more along the lines of what has moved forward. An example of that is Chris Wright, has something going on up in Idaho, right next to the national lab there. And several of the people that we watch very closely are involved in that, whether it's Oklo, ALO, there's several that are GE Vernova, they're all involved in that production, and they're still on track for this July 4th to show. Now that one's more of a demo. It does create power, but it's not going to power the entire data center that's eventually going to be right there. But once you have that done, with the full force of the administration, they think they'll be able to get it out there pretty quick. I mean, they did this one in a year. So where are we at in terms of the bottleneck? It's still there, but they are certainly moving permits along very quickly. There are still those people out there like the Bloom Energies and the Aolos and the DG matrices that want to help. Now, DG is not an energy producer; they're more of an energy spoke. sends
Okay.
different types of energy, different
This is a
directions.
public company, Phil?
Yeah. No, not yet.
Do-
Not yet.
okay.
Yeah, it's fairly new. They've been around for 32 years. A good buddy of mine, Lon Cunningham, is the chief uh, commercial officer there. So he's responsible for a lot of the. He had a booth for a few days along with his minions and some of the people above him out at NVIDIA's GTC conference in San Jose. So I'm getting a report back from him in bits and pieces. So the reality is we're still in the same position, but things seem to be a little less knee jerk reaction, for
Yeah.
lack of a better term.
Yeah. So I have an investing question for you, Phil, if you're comfortable
Of course.
answering an investing question. And this is a question I try to figure out myself while I look at Micron that, had an unbelievable quarter. Obviously, a lot of that, the move up in its stock price, it was like we knew they were going to have a crazy quarter, and we know they're forecasting another crazy quarter of crazy revenue. This is Micron. But just in general, when you look at something like a GE Vernova, or you look at an Oklo, or you look at something like NVIDIA or Micron, how do you distinguish a genuine long-term buy and hold idea from a cyclical trade? Like, what if I just want to buy something and chill for a decade? How am I going to time this build out, this data center build out? What happens when it stops and when we built all the data centers and it's done? So how are you trying to invest in this type of stock market is my question.
It's a very loaded question. There's a lot behind that question in terms of the answer. So you bear with me. But let's start with
time. We got all night, guys.
There you go. Let's start with Micron. All right. I need to tell you a quick story to show you how inept I am, because I'm not just an occasional expert on things like stocks and the markets. Well, I'll tell you a quick story. My dad asked me to go to lunch with him in 1980 at this place called the Fish Market, very famous restaurant along the peninsula between San Mateo and San Jose in the Bay Area of San Francisco. So didn't really know what was going on. I just knew I was having a lunch with my dad. When I show up, he's with this guy, and he introduces the guy as Alan Shugart. And I don't know who Alan Shugart is from a hole in the ground. And Alan's there to pitch me on becoming a sales representative and quasi-engineer for his new company called Seagate Technologies. And this is going right over my head, the stuff he's talking about.
Yeah.
And he's going, I can teach you what you want. And I eventually said, I'm just not that interested in data storage, memory storage. So, I'm going to go back to the little job I have over here, and maybe we touch base later. Well, Seagate came out in about 2002 with a $12 IPO. I checked it yesterday; it was $424.
But was there any splits? They could even split.
There was, I believe, the dividends really didn't do much. But I know I would have been a very wealthy person if I had done that. I would have been one of the first people he hired, probably in the top 40. And I had no idea how my dad did that, but I was just too short-sighted to say this is a future I should get myself involved in. I didn't know that it was going to be, and I would have had to stick around for almost 30 years, right?
Yeah.
So, or more before I really started. So the real question you're asking me seems to have a cyclical type of a question, right? So that's the wrapper around your question.
Exactly.
The semiconductor industry is cyclical, just like banks, just like homes, investing in home. They're all cyclical. There's a lot of cyclical businesses out there, right? And the difference is that AI has taken some of those semiconductor opportunities off of the shelf and are no longer going to be cyclical. The cycle is going to be 10 or 15 years, not the typical 2 or 3 or 4 years. No one believes in my heart, I think no one believes more in NVIDIA than I do. No one has studied them any more than I have, maybe as much as, but they are the epitome of a moat. So your question is, how do you invest in something that's cyclical and stick around long enough? And the answer is moat is a lot of it, and leadership, and the right kind of framework around that. You realize that Jensen Huang has 60 direct reports. How many CEOs do you know that have 60 direct reports?
Mm-mm.
And he can do that because there are so many different products that are necessary. This is not about Blackwell and Rubin and Feynman and all the different ones that are stacked up for the next 3 years. It's about they've created an entire ecosystem, an entire platform. They're going to start making so much money outside of just basic semiconductor money. That's why that whole thing that you and I were going back and forth with were about, well, how do you go from 500 billion to $1 trillion? That's no growth. Doesn't sound like any growth. If you just said we'll have 500 billion by the end of 2026, and we'll have $1 trillion by the end of 2027, in reality, it doesn't sound like growth. But they were only talking about 2 chips, Blackwell and Rubin. So there's so much more going on. A great example of this, I think, is from his keynote this week, Monday, at GTC. For those who don't know, it's Global Technical Conference is what that stands for. And he brought out the newest racks. And in those racks, they had invested $20 billion in a company called Grok. Now, not the Grok that we oftentimes hear Tesla and Elon Musk associated with, it, spelled differently. And they had essentially bought the company. And they knew that they couldn't buy the company and not have a regulatory blowback down the road because of their leadership position, and their margin efficiency is so much higher than anybody else. That's 75% gross margins. So they just invested. And now they've got all the employees working for them. Well, they came out with their first ever Grok chip that's inside of the Rubins that are coming out right now. They're already in production. They originally
said this is the TPU or the.
You could call it a TPU, but so they now do CPUs. So they compete directly with the CPU manufacturers, and they do essentially a TPU with Grok, and they're continuing to advance their own. And you're right, the slope of ability with each new chip is so steep that the average company is going to say, well, if every token equals money, a percentage of money, which is true, then I want the best. I want the best new stuff because it's going to equate to more money per token, and per watt, basically. So energy is money. And if you keep doing this, you're going to just keep stacking up the energy availability. Now, what's nice about it is that the newest chips are starting to be a whole lot more efficient, a whole lot less water's coming down the pike around 2027 for each of these racks. It's not going to be zero water, but it's going to be less water. Matter of fact, the water they're going to use is 45 degrees Celsius. So that's pretty damn hot. So you don't have to have cold water. You just have to have water because of the efficiency of the NVLink that holds all of these 72 chips in each rack, and each rack goes into another stack.
Mm-hmm.
So it's gotten to the point where no one can catch them. And I have two nightmares. Nightmare number one, the US government gets involved and tries to shut them down or slow them down.
I know what your second nightmare is going to be.
Go ahead.
You want me to tell you?
Sure.
China invades Taiwan semiconductor.
I don't think that's an issue anymore. I mean, it's an issue, but it'll be a very because they're already breaking ground on another US-based TMSC. So they're in the process of doing that. So it is a problem, but keep in mind,
not your number two nightmare.
No, number two
What's your
nightmare
number
is
two?
he walks around the corner of a street and busts it.
Oh no, no, don't say it. Don't say it.
There are
Yeah,
some
because I
wacky
don't know
people
who
in
his
this world. There are
success.
some
I don't know
wacky
who his
people in this
successor
world.
is.
There are some wacky. Oh, Colette Crest would step in. She's the CFO, and she'd do a great job. She knows her stuff.
Sure.
I'm
Yeah,
not
she's
worried.
great.
I just think it's going to create a havoc in the industry, not just the company, for a short
Yeah.
term. And that's what's going on here with respect to what's going on with the administration, with Iran, with Cuba, with Venezuela. You get to a point where eventually the market cannot keep fighting those punches off.
Yeah.
It's like a 12 round, heavyweight fight. You get hit enough, and eventually you're not going to get back up off the canvas, and the referee's just going to say, "Okay, we're done here. We're done here." So that could happen to the Nasdaq or the S&P or even the Dow.
Sure.
So if we get to 150, it's getting close to that kind of an environment relative to how the market's going to be affected. And I think that this stuff needs to start getting resolved by May, sometime in May. I know it's a long way out, and everybody keeps thinking 2 more weeks, 2 more weeks. I hope so. But I think if we go all the way through April and halfway through May or the beginning of May, somewhere in that range, it's hard to predict these things, that we're going to have really big concerns about our investments.
Sure. Yeah. So really, the best answer I've gotten was from you just now, and I think in terms of trying to figure out how to invest in this cyclical data infrastructure, crazy build out, it really is moat. I think that's a great answer. Now we go back to Clinton. See how I'm doing this, and then eventually
There
we
you
go
go.
back to Eamon. This is
No,
not that easy.
one last second though,
Go
Colin.
ahead.
I got to tell you that the microns of the world, the memory and the storage, that could turn. That could turn faster than the semiconductor portion or the platform portions, because that may still we may not need so much storage with some of the new things that are going to come out in the next 2 years. So they just announced yesterday, Micron, that they're about to break ground in a whole new facility. And it's going to take 3 to 4 years to build. It's going to be like 20 billion to make it run. Well, I'm not so sure that that's the way. What's the buy point on something like that, right? You probably missed it already, but
Yeah, 100%. Look at SK Hynix. Look at out of South Korea. I own Lam Research. Thank God they're more
yeah,
diversified.
I have it for my son. Yeah, I
Or
have
I
it
would
for my
be
son.
frightened. And Micron trades at a 10 forward multiple. So it does trade at a cheap valuation because it knows it's a cyclical type of business.
Well,
But
last thought is that they did buy two optical companies, or buy into at $2 billion a piece. NVIDIA bought into two optical companies because they're going to use fiber more so than anything else. And that's going to
yeah,
reduce the requirements that are so high right now with copper. Copper is always going to be here. I thought
yeah,
a year ago, I thought copper is going to go away. But we said
yeah.
that back in the 80s with respect to telephony, and it never went away. So,
Okay.
but it
Yeah.
is going to help. It is going to help. It's
NVIDIA
going to
has
further
so much.
require that moat. That moat just gets larger and larger.
Exactly. NVIDIA is such a cash cow at this point that, they're building this umbrella. They're becoming like a monopoly within this monopoly. It's crazy.
And the announcement that they made
And
too, Colin, with respect to, we're now going to put 50% of our net revenues into purchase buybacks and dividends combination.
they're free
That,
cash flow.
yep, they're net, right? And I
Yeah.
think
I'll close on that.
that's huge news, because everybody's tired of the stock trading sideways for 7 months.
Yeah, but I don't want dividends, please. Just share
No,
repurchases.
and that's
I'm
what I
kidding.
said. That's what I said on Substack yesterday morning. And there's one gentleman that just doesn't understand what I'm trying to say. He said, "Oh, it's a wash then." I'm like, no, it's not a wash. You put all the money
Yeah.
into buybacks and no money into a 1% dividend. That's not helping me.
Right. No, I mean, everything comes down, and Eamon, I'm talking to you because we're going to teach you everything about investing. Everything comes back down to shareholder returns, because otherwise it doesn't matter, right? It all comes down to shareholder returns, and the main shareholder returns really come down to just share repurchases and dividends. But also look at Nvidia. I mean, they are an M&A machine, and they're figuring out ways how to do it. So it's not like they got to go through some regulatory issue like they did with trying to buy ARM Holdings. So they are finding unique ways to purchase these type of companies, I guess, make these type of deals where they don't get struck down by politicians. So great discussion. I want to come to Clinton real quick about what you're seeing in terms of behind the meter. I have a few questions, and maybe this isn't behind the meter. I'm very curious if you're seeing any Caterpillar generators, because I'm a Caterpillar guy. And also, what are you seeing with like Vernova and their turbines, and anything we're missing as investors without giving us insider trading info? What are you seeing in that field? And also, talk to me about any kind of, waste to energy, if you see that. Like waste management, apparently they can convert waste streams into utility grade energy. I don't know if you see that in your world.
Yes, I do.
Matter of fact, yesterday, weren't you on a landfill?
Yeah. So Tuesday we were on a landfill looking at that exact thing up in Monterey, taking landfill gas and converting it to energy in a way that is efficient and also helps them with their emissions requirements and things like that. And then go ahead. Oh, sorry. And then today, same thing. We were at a local municipality looking at their wastewater treatment plant to do the same thing. So they have very strict emissions requirements, and they don't want to put this stuff through the flare if they can avoid it. And there is equipment and technology and solutions. And in fact, I actually prepared 3 quick slides. If you want, I can share them.
Yeah, absolutely.
I'll blast through them, and we can share later if somebody wants to, get more deep into it. But let's see if I can.
Am I allowed to post it?
Yeah, I can do that. Let me just quickly see if this is going to work and I don't break things. So can you guys see it?
Yeah, I see
Probably
it.
make it bigger. Yeah. If you could make it bigger, it'd be great.
Let me try. Let me see if I
think
can.
It looks perfect.
Okay.
You guys can see it?
Yeah.
Let's see if this works without me breaking it. All right. So to the points about, is there other stuff going on that we can do? Sorry. Yes. Agreed on everything.
I love NextEra Energy.
I just saw that too.
All right.
I own NEE. Yeah.
Yeah, you guys like that NextEra?
I'm a fan. Yeah.
It's done well the last 52 weeks.
Nice. Excellent. Well, I'm not the best investor in the world. I'm trying to get better. I've doubled my portfolio in 10 months, but that's through active management on my part, using my down run tools and stuff. But
there you go.
So here is the kind of what we're seeing. Basically, it's what we talked about. It's where the markets are predicting all these chip sales and infrastructure build out, and we just don't think it's possible given all the constraints, at least not currently. That doesn't mean things won't change. It doesn't mean people aren't taking action. So things can change. It's going to be somewhere in the middle, we think. But right now, our AI power infrastructure trade thesis is basically that the power bottleneck is in the physical power stack. And so firm generation includes the gas, nuclear, hybrids, and time to power, grid, transmission, and interconnection timelines. The electrical gear, the switch gear, transformers, breakers, we talked about that. 2-year lead times on that. Thermal, the liquid cooling and power distribution inside the racks. These are all the infrastructure pieces. And then, of course, the engineering, procurement, and construction execution capacity, labor, schedules, permitting. Because it takes about 2 years. So if Rigatoni Capital called me today and said, "Hey, Clinton, I'm ready to go. I got the capital, do this thing, make it happen," we'd be lucky to get it online in 18 months. Right? So scarcity, pricing, power, and capacity become the constraint. So here's the tickers. You guys got that little sneak preview there.
I actually don't know Eaton that well, and I don't know ticker PWR that well.
It's like a Caterpillar, Eaton.
Yeah, I bet, Phil, I bet you know these well, because I know you're deep in the investment game. So you could probably talk to these way better than I could. But these are some of the ones that I'm looking at GE Vernova, love GE Vernova. NextEra, I've been talking and tracking NextEra for a while. Eaton's well known in the energy and infrastructure game. And then, of course, I think we've all heard of Constellation,
Yeah.
right? Eamon, I know you're connected with those guys too. And
Yeah.
so here's, the current price, and then we did a bear base and bull calculation with the probability of what we think it might be somewhere, in the middle.
Gotcha.
So yeah, that's kind of what we're looking at there.
How much
And
time can you shave off, if at all, Clinton, if you do that same build out for Rigatoni Capital in Oklahoma or Texas versus California?
yeah, it probably depends. I don't know because I'm not really building them out in these other states right now. So I have to
Gotcha.
be fair with that.
Sure.
So I'm not sure, but I do know that one of the most restrictive places to do business is California. And so, I could build that out. I could actually do that calculation, just not right this second. But basically, what I would do is I would take a look at what the lead times are for the equipment, like you saw that infrastructure on the first slide. So there's an equipment lead time delay. There's an interconnect agreement delay. So then I'd go look at the interconnection queue, because that's another thing you could do is look at what the delays are on queue. And then I would build that out and I could tell you, okay, here's what we're looking at today realistically. And it's exactly, 2-year lead time on these parts and this and that and the other. And then where we kind of bring value is we know how to attack that in a way that is not in series. So we're not waiting 2 years to get the interconnect agreement to start the build out. We're already started. We're building the design, then we're going to the city. Well ahead of that, we've already submitted the interconnect agreement, and we're working with the utility applications. And then, we're working at everything not in series but parallel. So
I would
Thank you for
mention
sharing
for
that.
the,
I
I would
appreciate it.
mention for the readers and listeners that you don't want to have just these companies in your portfolio. The average investor probably has 7 stocks, maybe 10 in the high end. It's unusual to have, 18 to 20 like I do, but you really don't want to be all in on energy, even if it's different parts of the energy flywheel.
totally agree.
Diversification.
Be careful.
Diversification always.
Yeah, be careful. You
Thank
got
you,
to be
Phil.
diversified.
Okay, guys, I'm going to go to Eamon real quick. Eamon, we're going to bring you back. I missed you. Look, I want to know your thoughts on, we talked about it briefly, and on how serious of an issue this is with Iran and energy prices and oil and LNG. And I just want to know, have you thought about comparing it now to the 1973 oil embargo?
Oh man, yeah, that's a good question. I guess yeah, it's so I was not alive at all then, so I don't have any kind of personal experience, but it's I think it's really hard to actually compare them realistically. I mean, um, yeah,
Because you
like
wrote a
in
nice piece about comparing it versus the Venezuela situation. And I think the thesis or the summary was like, it's we can't, because we have oil, right? The United States has
yeah,
oil today. So we're not as dependent. But this situation seems a little worse.
that's true. Yeah, I think yeah, the premise of that pretty much stands, I think. Like yeah, when we manufacture domestically or have more production available, then we'll be more resistant to the supply shocks that are currently taking place. I think that's very prevalent with like the natural gas. I was really surprised by that. Just that because particularly natural gas prices spiked a ton back in 2022 even. with the Russia-Ukraine war. And that lasted for I think a couple months. Where yeah, it just everything was so expensive because we export a lot and trade with Russia and um, but now, kind of that like same price hike was really expected and lasted for maybe a day when that initial shock happened. But for the most part, it's been really kind of consistent. I know like where I am in New England, we get a lot of our energy or LNG from Europe, so that's we've had some higher natural gas prices there, but for the most part, a lot of that's produced domestically. I totally forgot about California's gasoline prices. I think California in particular is just hit the most out of it. So I definitely misspoke there. I guess Massachusetts hasn't been hit as hard, but um, yeah, going back to the 1970s, I think we're better off when we produce domestically. Um, Super short, but
That's a huge
Yeah.
difference right there, though, right? So in
oh yeah,
73, we didn't
absolutely,
produce any oil, really, any
right.
Mm.
gas. So that was the year I got
Yeah.
my driver's license, by the way.
Oh, nice. Yeah,
So
and
that the difference
yeah,
today is we've got lots of, oil coming out of the ground, and we're doing a lot of refining, et cetera. But we were
exactly.
10% back then. So
Right. And yeah, the I guess the difficult part is like the different kinds of crude. So we like produce a lot of the sweet light crude, but we import a lot of the heavy sour stuff. So it's like we still export mostly, but it's beneficial for us to import a lot of like Canadian, Venezuelan heavy crude. So it's a balance there that isn't going to be easily solved, but definitely nice to have more supply
Yeah.
on hand. So.
do you know if a
Yeah.
combustion engine runs better on the heavy versus the light? I've never understood why do we need both.
I think I know in particular like the tankers rely on the heavy stuff, which is basically it's not even just like
Probably
basic
diesel.
automation.
Is that
Yeah,
what they use diesel for? Okay, makes sense.
yeah. So like any that just impacts like any trade anywhere. It's like okay, well I guess the heavy stuff. But yeah, I don't know as well either like what cars use or run on the best. So
No worries. Thanks.
Yeah. I can tell you we have a fertilizer issue in my industry for sure.
Oh yeah.
oh
Yeah.
Yeah.
So let's try to wrap this up because we've gone an hour and I got to eat dinner or I get hangry. So we're going to end this with a fun, different thing today. And I'm going to go backwards again. So we're going to start with Eamon. And if you don't feel comfortable answering it, we can skip you. So the question is, why do each of you genuinely believe this conflict with Iran started in terms of the strikes we had 2 weeks ago between, in combination with U.S. and Israel? Not a political spin, just your actual read on this on the situation. Aben, you're first.
Yeah, I think it's just geopolitical security. I also heard, I don't know how true this is, but an article a couple weeks ago saying that Trump was worried that Khomeini was going to take him out a couple of years ago. So it's kind of
Wow,
like a reverse, like, oh, I'll get you first before you get me.
such a
But yeah,
great
just
point.
it's
Forgot about
I
that.
think it's yeah, it's been boiling on for a while, so just kind of securing that region, I guess. But
Yeah, so the geopolitical answer, that's my answer too. It's probably everybody's answer here, I have a feeling. But Clinton, what do you think?
Dude, man. Okay. I would say I was going in the geopolitical realm as well. But to be honest, I was thinking something similar to what you said, Amon, which is like I hate to say this because it's almost like, wow, really? But maybe is that maybe we are that petty that it could even be not even a real security thing, but for whatever reason, as long as I can remember, 30 years, I remember being a kid and hearing CNN on the TV at 5 a.m. with my dad in the room next door. And it was always, Iran, 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 the evil devil, evil devil, evil devil. Well, my father-in-law is Persian, and so his family's in Tehran. And he's the one that taught me that it didn't even used to be like this. That in 19, before we installed the regime, the U.S. government, they were like America. They were Western, there was muscle cars and bikinis and all this stuff. And so I don't know what's going on. It's got my head spinning, and it makes me think that there's a whole heck of a lot more than even that, even the obvious
Yeah.
stuff. So
Yeah, I like that. Phil?
Fun fact, the little college that I went to on the other side of Berkeley, over the hills from Berkeley, used to have a 10% we're talking about an 800 person school for undergrad. We had about 10%, or about 80, that were directly related to the Shah of Iran's family that were students. And they were great people. Then all of a sudden, as we were moving into the sophomore, junior, one day they just never came back to school. So it was
Wow.
rough. I mean, I'm not saying they got killed. They just
Sure.
weren't allowed.
Yeah.
They weren't allowed outside of their country anymore, I think,
Oh,
or they had to go into exile. And it was sad for a lot of people. I didn't personally have a lot of really, really close relationships with these, but a lot of my friends did. So that was brutal. But I think it was opportunistic, to answer your question, Colin. I think Israel got really good at identifying the movements of the regime individuals. And I think Netanyahu knows how to push the buttons within Trump's administration and with Trump himself. And he probably convinced him, I could take out half the regime, because we know where they're at now. We know where they sleep. We know where they travel. We got all the patterns. It's very similar to what we did when we had to go into Pakistan to eliminate, who. So I think they just got really good at being able to understand what their cycles were. And they could be really self-assured that we can hit these people and hit them hard. And so they became opportunistic. Yes, it's geopolitical. Yeah, they blew it by not understanding the impact oil. They really should have had that better under control. And they figured if we drop 15,000 bombs, which is what they've done so far through Tuesday of this week, that they would take out everything that was of material need for Iran. And obviously, that's not the case.
Phil, you sound like a Palantir investor with your pattern recognition.
Actually, I was, and I got out after it took its one big run there in 2025.
Good for you. Yeah.
I'm sorry, 2025. But no, I don't have anything, and I'm a bigger Palmer Luckey guy. Do you know who he is?
Are you an investor in Anduril?
I can't, because
I know,
they're
I
not
can't
public,
either.
and I just don't have the money. You got to have at
my
least 200.
boy Saquon Barkley is an investor.
Well, there you
Anduril.
go. He's got the money to be able to
Yeah,
do
he's got
that.
the connections. Yeah.
Yeah, well, and you have to have two. I tried doing it, to be honest with you, and there's a $250,000 limit that you have to be able to show liquid net worth. That you got, not stocks, not homes. You got to have it just sitting around like a bank or somewhere.
Yeah.
And I don't qualify for that. All my stuff's tied up in the house, etc. So I would have done that. I mean, I would be doing that with SpaceX too right now. So
Definitely.
Appreciate your
guys. Thank you so much for coming on. Again, I'm gonna just mention to the listeners, please subscribe to Eamon O'Malley, Clint Substack, Clinton Smith, and Phil Pinelli at Stock Talk. And again, they do their podcast, which is called the Power on Power.
Power is Power.
Power is Power. Yeah.
It was actually DG Matrix that gave us that idea on a podcast.
Nice. And guys, have a wonderful night. We went over an hour, and I think that's a perfect time. And I have 10 pages of questions that we didn't go through. So and next month or another time you guys think you're available, we'll do it. Okay.
Absolutely.
Yeah, this was amazing.
So much.
It's always a great time with you.
Well,
Thanks.
yeah. Thank you.
Thank you so much.